What would 3 things that a borrower would do that get it wrong at the start?
Probably
When should you engage a broker?
an author called Robert Schuller, and one of his famous quotes, people don't care how much you know until they know how much you care.
In 3 words, how would you describe the Townsville market?
Very exciting. That's only 2 words. Buy now, pay later schemes like
you
Zip
said,
Pay, Afterpay.
Yep.
You know, you have to keep records to break records.
Yeah.
So if you want to cut back on your spending, the first thing is to identify.
All right, today on the podcast, I'm joined by Brett Geiszler, legend mortgage broker, has been helping people secure homes and investment properties across not only Townsville, but the whole of North Queensland region. He actually helped me in the past as well. So I just found it, very trustworthy and has a real deep understanding of the finance game, especially Townsville market here. And with the Townsville market really heating up over the last little while, I think we've had 20% in the last 12 months. I thought it'd be a great time to get Brett on and just talk about lending, mortgage broking, where do people go right, where do people go wrong, and just what's happening in that space right now with finances. So Brett, mate, welcome to the podcast.
Thanks very much. Great to be here.
Thank you. I thought maybe we'd just kick off with just a little bit about you before we get into all the broking sort of stuff and the thick of it. Just a bit about you, just where it started. Like, did you always grow up in Townsville, or where did you grow up?
No, I was born in Brisbane, grew up in Bundaberg, so a small country town.
Yeah.
Back in the days when you could just jump on your bike and ride around town and do whatever you wanted and be home before when the streetlights came on. But I always wanted to be a police officer, so I joined the police force out of school, and I actually ended up in Townsville. Yeah, in the police. I was transferred up here from the Gold Coast in the early 80s, 83.
Yeah, wow. How long were you in the police for?
14 years I served in the police, and got out in 1996.
Yeah, wow. Yeah, and then straight into mortgage broking, or?
Well, we had another business at the time, and that was going along quite well, and then backed off and saw a little bit of redress. So I was looking for something else, and through a friend of a friend, there was a mortgage broking was quite new in those days, but I had a friend who had a friend in Cairns who had a mortgage broking business, and he was opening up an office down here. So I went to see him and ended up getting on board and did some training with him. And I didn't stay there too long, but an opportunity came up with Ray White Financial Services.
Yeah, okay. And because they used to have their own in-house financial.
They had an in-house broking, finance division back in those days, and I started with Ray White, and then after about 12 months went out on my own. So very early on, I decided that it was something that I wanted to do myself rather than work for somebody else. Yeah,
what was it about broking that made you want to do it? What?
Well, coming from law enforcement, putting together briefs of evidence and that for the criminal courts, I saw, putting home loan applications together quite easy.
Yeah, it would be after that.
Yeah, because it's the same sort of thing. You're putting together a case and submitting it to a bank to get approval for somebody.
Yeah, that makes sense.
And I just enjoyed helping people. I joined the police force really because I wanted to help people. Yeah. The police force changed a lot after the Fitzgerald Commission of Inquiry, which was in the late 80s.
And, people still talk about that today.
Yeah, people still talk about that today, and it had a big impact. There was a lot of negative press around about police, and it wasn't a very good time to be in the job.
Yeah.
But that moved on from that, and it was that desire to help people, and that I think that led me into mortgage broking.
Yeah, I think policing. People forget about that. You are really out there helping people. Like, no one needs a police officer when they're having a good time. They're always at the worst time of their lives, probably when they're
That's right.
needing a police officer.
Yeah, and that was the refreshing thing about the mortgage broking career was you were meeting people when they were excited. They were looking to do something financially. Obviously first home buyers, or whether they're buying their second or third home or an investment property. It's a big thing, and they're excited about that, and it's totally different experience than dealing with people at their lowest. Yeah.
Oh, 100%. I think that's Oh, for me, like when you're dealing with a bank or a broker, it used to always feel like you were going into the principal's office sort of thing. You felt like you're under the microscope, and you would say, oh, you got nervous and you think, oh, this is my spending, this is what I'm earning, what can I do? And you're always sort of nervous about it. But yeah, dealing with you when we went through the whole process, Al and I, when we were buying, it was fantastic. It didn't feel like that at all. It was just a really smooth process. So, yeah, thank you for that. I don't know if I'm pretty sure
welcome.
I did back then, but yeah, thank you for that.
I think that the thing with that is that as a broker, we're working for the client, not the bank. So when you go into a bank, you're talking to somebody who's employed by the bank to sell home loans. So you're talking to somebody who is very motivated, even remunerated on the basis that they, get you to have the home loan with that particular lender. Whereas when you're dealing with a broker, we are...
You got a panel of people?
Yeah, we've got a panel of lenders that we're representing, and our goal is to try and help that client understand the lending maze, weed through all the jargon, and, present an application that's going to get approved and get them the best deal that we can.
Yeah, work out what the best deal is for them.
Yeah, so, and it's not so much even just the best deal. I mean, the first thing people look at when they talk about a home loan is the interest rate, obviously, but there's so much more that goes into it in terms of lender policy, the other fees and charges that are associated with a particular loan beyond just the interest rate. And lender policy these days varies a lot from one bank to the next. So we could have a situation where a customer could go to 3 or 4 banks and get declined, but then the fifth bank might actually approve that loan. But where do they stop? Whereas using a broker, we can straight away identify where that loan's going to have its best chance.
Okay. Yeah, because there is so much more than just interest rate, and interest rates are so topical because that's what everyone hears about on the news.
Exactly.
But I've spoken with numerous buyers, and everyone uses it maybe for an excuse, or they think, interest might go up, so we're not going to pay this. But if you're asking them, well, if interest rates do go up, is it going to stop you buying a house? And they say no. Okay, well, if they go down, is that going to stop you buying? No. So yeah, interest rates just a little bit of it, but not the whole picture, not the whole story behind all of it.
Exactly.
So, yeah, I think so too. So yeah, and you've got Dean now working with you alongside you as well, your son Dean.
Yeah, it was just myself for a number of years as a solo operator. In the early days of mortgage broking, it was very much the industry sort of kicked off with providing a service that the banks didn't, whereas you'd have to go into a bank during working hours to make an appointment to see somebody. In the early days of mortgage broking, it was very much a broker would come to your home in the evening. The industry's changed a lot due to regulation. There's more and more paperwork that's needed. So most brokers now are office-based as well, but certainly, a lot more flexible than dealing with a bank.
I used to always see the cars, like the brokers' cars were always wrapped, like in the big brokerage, all around, and you'd see them out front of people's homes, and they're always known for, hey, they'll come to your home. And
so, I moved on from being a solo operator to having, first of all, an assistant, and then putting on somebody to help with the lending. And at one stage, I had an office manager assistant that left the business, and at that time Dean was not long out of school, looking to do something, and decided to try the family business. So he came in initially about 8 years ago as an assistant to me, and processing the loans. Really so he's been with me for a while. Took him a couple of years to decide that it was what he wanted to do long term. So then he went and got his diploma, and is now a qualified broker and is doing well.
That's fantastic.
We're very proud of that.
Yeah, you guys are a really good family-orientated business.
Yeah, well, we've got Dean in the business, and a few years ago now, Jessica Mackenzie came on board as a broker as well, and Jess is a really valuable part of the team. And we've got Adrian Doyle, who's been with us now for a couple of years, who's been a processor office manager, but he's also just gained his qualifications as a broker.
Yeah, and you got Bev in the background as well.
Bev, my wife, she's the backbone of the business. She does all the bookwork and makes sure everybody's paid, and does keeps all the books and that in the background. Yeah,
fantastic. Yeah, you really need that because you're out there selling, but you got Bev in there keeping everyone accountable. So.
Yeah, we're in front of the clients and doing what we do, and Bev makes sure everything keeps clocking along as it should.
Yeah. It's very good. Yeah, I guess tech and tools, like has tech, like we've seen technology change in our industry as well in real estate, especially in the last, we definitely noticed over the last 20, but in the last sort of 5 years, technology is really ramping up. Have you seen it change much over the years with broking? Like you're now more office based than running around.
Yeah, and definitely when I started in broking, we had, a A4 lecture pad and a financial calculator and a bunch of application forms from all the different lenders. And it was very much, still a very manual process. We, believe it or not, used to fax loan applications through to the banks, and they'd respond with faxes and that. These days, it's all web-based. Email communication is the predominant thing. Applications are lodged electronically.
Yeah, with DocuSign.
Documents are signed electronically with most lenders now. So it has been a big change, but it's still a people business. The way we do business is using the technology, and AI is coming into that as well with helping with the research and that sometimes. But it's still very much a people business. One of my favourite sayings goes back to an author called Robert Schuller, and one of his famous quotes was, people don't care how much you know until they know how much you care. So we adopt a very personal approach to what we do, and want to find out what the client's aspirations are, what their goals are, not only for the immediate transaction but down the track, just so that we can help guide them so that they're in the best position when they want to take the next step, and not necessarily just settle that immediate transaction that's their current need.
Yeah, because a lot of people are transactional. They're just looking for that deal straight away. And we find it in our industry, they just want that deal, but then they forget the people and they never hear from them again. They're just all transactional based. But I find that we get a really good response with our clients because they are clients for life, exactly like you said. We help them when they're... I've got a guy now that we're dealing with, and we had kids about the same sort of age, and now he's about to move on and they're upgrading their personal house, and it's been great to see their journey over the years. And every 12 months we sort of catch up, go over what they've done with their house, where they want to be, and then now they're moving up to a bigger house as well. And I think the longer you're in this business or any business like that, and you see those families move up and down the chain on the real estate ladder, it's just really good to be a part of.
Yeah, and I think that's where the alignment is with what you do in real estate and what we're doing with finance is, for most people, real estate home loan is a long-term transaction. They're probably going to be in that property a number of years rather than weeks or months. Sometimes, a 30-year loan is the norm. So we're dealing with people on an ongoing basis. One of the things we like to do is encourage people to have a regular review of their loans. So, we contact people a few months after settlement just to make sure things are set up and going as planned. So if there's any hiccups with the lender, we can get back, feedback to the bank about anything that might have happened in getting transactional accounts set up and things like that. But then we always keep in touch. We're very religious on making sure that we send our clients a birthday card with a scratcher every year, just so that we're top of mind. And a birthday's a good time, to make contact and have a review of their loan. One of the things Adrian's been doing since he come on is proactively reviewing clients' loans that haven't reached out to us for a number of years, because the longer you're with a lender without reviewing that loan, there's a thing in the industry called rate creep. As lenders adjust their rates when rates go up and down, what's being offered to new customers is very different to what an existing customer may be on, because they obtained their loan under a pricing structure that was in place maybe 3, 4, 5 years ago. And if that isn't reviewed, generally, we find people that have been in their loans for only, 4 or 5 years that might be paying 0.5% to 1% more than they otherwise could be. Yeah.
So would you, maybe yearly's too soon, but maybe every sort of 3 years, maybe 1
to 2 years is a good time. Yeah.
Okay.
And some people, I think, maybe feel that they're doing us a disservice by contacting us to do a review regularly. Oh, I don't want to worry you.
Yeah.
But, literally, for the time it takes to do a review, we want to help our clients make sure that they're getting the best deal. So that's what we're there for.
All right, well, I'll probably have to give you a call. It's been sort of I think it's 6 years now since we did that, and I don't think we've played with it too much. So we'll have to get a review. And then when should you engage a broker?
Well, as soon as you start thinking about a financial transaction. Bear in mind, at Astute we do more than just home loans. So we're doing, personal loans, equipment finance, the whole range of cars, caravans, motorbikes, whatever. So if you're looking at a financial transaction and you need finance, that's the time to have a chat with a broker, just to find out where you're sitting, what's going to be required. The technology has impacted what goes on in the background in finance. So a couple of years ago, there was a thing introduced which is called positive credit reporting. So lenders now report to credit reporting agencies on a monthly basis for existing financial accounts. So something as simple as, missing a repayment or being late on a repayment can have an effect on what's appearing on your credit rating, what your credit rating actually is. So it's a good idea to have a chat with a broker. We run a copy of the credit report, see what's there, make sure everything's okay, and make sure that the people are in a position to conduct that financial transaction, even if it's a little bit down the track.
Yep. So does a credit rating affect what you can borrow?
Yes. Yeah. Credit rating, pretty much all lenders now, certainly the major banks, operate a automated credit scoring system. So when an application's submitted, a computer basically assesses that loan application.
Yep.
What happens there is the computer takes into account all the parameters of that application. So the credit score is one part of that, the credit report. The other thing, employment, how long they've been in their job, what their income is, what the loan to value ratio is. So
there's a rhythm or an algorithm.
Yeah, so there's a very complicated algorithm that is going on in the background, and that is held very secret by the banks. There's probably only a few people within the banks who know what actually goes into their scoring system. But then once an application is scored by the lender, if it scores poorly, it's very hard to get that overturned.
And is that with that particular lender?
That's with that particular lender.
Okay.
Yeah. So that the credit report, the credit score is certainly a part of that, and it's something that we look at, and all of the other parameters that go into making up a strong application. Yeah. And that's why sometimes when we ask people for the list of documentation that we need to prepare a loan application, they'll see things like, the last 6 months of history on their bank statements, their superannuation statement with their current balance of superannuation, all the details of their residence and employment history over the last 5 years. We're not collecting that data just for fun. It's so that we can do an in-depth assessment of their situation, just so that we can be prepared to present that to the lender and to mitigate any discrepancies or any hindrances that might be in that application, such as it could be a short term of employment, or it could have been a late repayment on a credit card because they were on holidays and didn't receive the bill or whatever, So, but we can get ahead of the game rather than submit an application and then have the bank come back and say, oh, what about this, this and this and this?
What is this about? Yeah. Yeah, that makes sense. So, you're putting the best case forward, like a policeman would. You're putting the best case forward for that client to that bank.
Yeah, that's right. So the answer to, when do you talk to a broker? As soon as possible. Don't wait till you go and look at a home that you fall in love with and then decide, I wonder if we can afford it.
Yeah, no, we find that too. And I think one of the things we notice in real estate when someone is coming through or they're thinking about maybe making an offer on a property is you can generally tell straight away whether they have had that chat, whether it's with their bank or broker, just when you're sitting down and they're thinking about making an offer. Yeah, generally you can pick it straight away. You know the language they're using. Even if they haven't got a pre-approval yet, they know that, hey, look, we've spoken with someone. We're good for this. We just need to go through the formal process, because we found probably about 12 months or so ago where the market was really busy. Yeah, I think banks were telling people, look, we think you're pretty good for this amount. Just go shopping and we'll sort the pre-approval process out afterwards, because that pre-approval might only last for, what, a 3-month period? I think?
90 days
90
generally,
days,
yeah.
yep. Yeah, so save doing that and then going through the formal process again, because I think that goes on your record as well.
That's right. If an application is lodged and assessed, the first thing that the bank's computer does is order a credit report. So that comes up as an inquiry. Yeah. One of the things that contributes to a person's credit score on with the credit reporting agencies is the number of inquiries. So if a person has more than 5 inquiries within the last 5 years, one a year sort of thing, then that starts to lower your credit score.
Yeah, because people are going, why is this guy looking at finance so often? Or
that's right.
Why is it not getting approved when it's going?
The industry jargon is lenders talk about credit junkies who are always looking for credit. And it's just a red flag, because it's an indication that people are living a little bit beyond their means if they're constantly seeking credit for things. And sometimes it's quite an innocent
they
matter.
might just be going, hey, I think I want to buy a house, but then they don't end up buying it.
That's right. Or even something as simple as a lounge suite at a big electronics retailer. You know, they might go in and have a look at a new big flat screen TV or a piece of furniture, and a salesman will say, well, let's run some numbers and how much would it cost to pay it off interest free. Well, when they get your driver's license and do that, one of the things that it goes into seeing how much the finance is going to be.
I didn't think of that.
That's going to be a credit check. And even though that credit may not transact and end up in being an account, because you walk out and think about it and say, oh no, we won't actually go ahead with that, it still has an impact on the credit report.
It goes on your record.
Yeah, and nowadays, just recently, as of the 1st of July, the buy now, pay later schemes like Zip Pay, Afterpay, those things are now going to be recorded as well. So those, one of the popular ones we see a little bit now is the, I think it's PayPal Pay in 4. So you're not actually applying for credit, you're just paying it off, more like a lay-by. But those are seen as credit contracts now.
Yeah, right. Yeah, I didn't know. I always thought they would have been like a credit contract. I didn't think of it like that.
No, well, they've sort of been, the buy now, pay later things have been a little bit under the radar, but they're now encaptured under the
that'll catch a lot of people out.
Yeah, it comes back to, if you don't really need the credit, you're better off to pay for
just save it, because that's what I grew up doing. Like if you couldn't afford it, you didn't buy it.
Yeah.
You'd save up for something, or back in the day, if you really wanted something, you'd lay-by it. I remember lay-by was a big thing, and that sort of, with credit cards, that all disappeared.
That's right. Yeah, lay-by is sort of a thing of the past. Some of the oldies still do it, but it's not too many.
No, I can't remember last time I lay-byed something. But you did it as a kid. Back in the day. But where do borrowers go wrong? Like at the start, like what would 3 things that a borrower would do that would get it wrong at the start?
Probably try and buy a house immediately after they've got a new job. Employment stability is one of the major things banks are looking at. Changing jobs constantly is a thing. Excess credit. So having running balances on existing credit cards and things like that, because again, that if you've got 2 or 3 credit cards and they're all at their limit, that's not a good look when you lodge a finance application for a home.
I've spoken with buyers before, and they've said that. They've said, sorry, I just have to cancel this credit card, or they've had to cancel one, pay it off, cancel it before they get the formal approval.
The other thing that is a big thing since the Banking Royal Commission, and which a number of years ago, after the collapse of the local investment firm Storm Financial, there was new legislation introduced, responsible lending laws. The Banking Royal Commission that happened a few years ago was basically an investigation into the application of those laws. And since that time, there's been a bit of a crackdown on personal living expenses. Years ago, when we assessed a customer for a home loan, we'd use statistical numbers in terms of living expenses. It wasn't that in depth. So back in the old days, there was a thing called the Henderson Poverty Index, and I used to joke about the fact that the numbers were enough to sustain life but not encourage it, because it was quite. What's the word? It wasn't a true indication of what people would need to maintain a household. Okay. These days, there's a similar metrics that the bank use, matrix that's called the household expenditure measure, which is, again, a statistical number. But assessment of a loan application goes beyond the household expenditure measure to where lenders are required to verify a customer's living expenses. The legislation says that the banks, which includes brokers, the lender has to take reasonable steps to verify a customer's position. Yeah. So what that means is analysing the last
someone's bank statement.
That's right. The last 3 months' bank statements to get an average of how much they're spending. So if you're planning on a financial transaction, especially a large one such as a house, it's a good idea to check your spending and maybe just pull back on some things that are discretionary. Things like eating out, maybe having a bet at the sports bet on the weekend if you're a Cowboy supporter or something, because the banks are going to see that and need to take those expenses into account, which will reduce how much you can afford to borrow.
Yeah, that's really smart thinking, because people don't do that. And if they did go and speak to a broker early on, they can say, hey, look, we do look at your last 3 months. Why don't you just, stop all that discretionary spending for the next 3 months. We'll have a whole new set of figures to look at, and your
That's right.
situation can change.
Because when a lender assesses the application, they're going to use the household expenditure measure figure or the customer's proven expenditure, whichever is the highest. Okay. So where the household expenditure measure for an adult and 2 adults and 2 children, for instance, might be, let's pick a figure, $4,000 a month or whatever it is, but the bank statement shows that family are spending $4,500 a month.
Yeah, they'll go for the 4.5.
They'll use the 4.5.
Yeah.
So it is important that people be aware that their spending is going to affect how much they can potentially
And if you can get
borrow.
that 4.5 down to 3 or something like that for your discretionary spending, then you would be in a better spot.
Well, it's certainly a stronger application because you can show that you're living below the household expenditure measure, because the household expenditure measure is an average. So it makes sense that some people are going to be less and some people are going to be more. But banks will always err on the side of caution because they've got this responsible lending law hanging over their heads, which places all the onus to prove the customer's affordability on the bank. Yeah. So the borrower has really no responsibility in it, and that's why the banks may seem a little unfair, because you could prove to the bank that you're spending $3,000 a month, but the bank's going to still use 3.5 because that's what the household expenditure says the average is. So it's just a matter of being aware of it, not focusing too much on it. But if you're going to be going for a home loan within the next 12 months, certainly once you're up to 3 to 6 months out, make sure that you're aware of what your discretionary spending is.
Yeah, and if you went into a bank, I don't think they would tell you that.
No, exactly.
Because I didn't know that until speaking to you now. Are there any other things that before, like say a borrower comes to see you, that they should do or that they should find out? Or questions that what questions should a borrower ask a broker?
Well, obviously the big one is how much they can afford, to borrow is the first thing, but it's more a case of not so much how much they can afford to borrow, but what's realistic within the way they want to live.
Yeah, so borrowing capacity versus
borrowing
budget.
capacity based on their situation, which is what the banks are sort of trying to do obviously on a much broader scale. I always say to people, look, how much have you been paying in rent, for instance, if it's a first home buyer who's been renting, and how much have you been putting aside in saving? And then if we take those two figures together, the rent and how much they've been putting away in savings,
be able to put that into a loan.
We should be able to put that into a loan, bearing in mind that when you're renting, you don't have any other expenses, so you've got to allow for the costs of ownership, rates and insurance on a property, etc. But that's a good guide. But then it comes back to, okay, what have you been spending that you're planning on cutting back on? Because I know when we bought our first home back in the 80s, when homes were a lot cheaper than they are now, my wife and I decided that we would put all of my pay into paying off our house, and we'd live on her pay. And so we were sort of living a certain lifestyle before, whilst we were saving for a deposit, because we needed 20% deposit in those days. But the whole point I'm trying to make here is that you can change things once your priority is to pay the mortgage, And there might be some things you're not going to eat out as much, or you're not going to, pop off down to Airlie Beach once every 6 weeks for a weekend away, because now you've got a commitment to pay the home loan. So getting a bit of a mental state of what you're going into, and a realistic idea of your position financially is probably the most important thing that somebody can do
really good advice.
Before they come in, because we can do the numbers based on what their pay slip is and have a look at what they say their budget is, but it's going to take us some time then to go through their bank statements and verify all of that. But if they've got a good idea before they come in, accurate information is going to get an accurate answer.
And then putting that into practice and actually living within that budget, that's a different thing as well. So if someone come in and had that chat, and then you said, okay, well, look, you need to change these living expenses, so to bring them down, we'll do an assessment in another 3 or 6 months' time. But over that time, get used to living within a budget.
Yeah, and a budget's a dirty word. A lot of people don't like budgets, but the best thing that people can do, especially first home buyers who are new to this sort of thing, is I recommend, and these days it's so easy because the banks have on their apps, they'll help you track your spending. You can look into the app with some lenders and some financial institutions and see how much you've been spending at Bunnings, and how much you've been spending on groceries, and how much you've been spending at restaurants. It categorises it all for you. But I've always said to people, going back to the very early days of my career, buy a little notebook and carry that around and write down everything you spend, because that will very quickly help you identify where you're spending things that maybe
you don't have to.
Yeah, and probably the days of carrying a notebook and writing things down have gone, but certainly you can use technology.
Put it in the Outlook. Put it in
the Outlook. Put it in your notes in your phone or whatever. But you have to keep records to break records.
Yeah.
So if you want to cut back on your spending, the first thing is to identify where am I actually spending money, and what's discretionary, and what could I possibly cut back on, so that I can get into a house.
Yeah, okay. And getting into a house, because what you were saying earlier about needing a 20% deposit back in the day.
Yeah.
Can you buy with a 5% deposit, or do you need a 20% deposit?
No, certainly now you can and for many years you've been able to buy with as little as a 5% deposit. Yeah. Bear in mind, if you have less than a 20% deposit, then the bank's going to take out insurance on the loan. That's called lender's mortgage indemnity insurance.
Yes.
That insurance indemnifies the bank because they're lending the customer a high percentage of the property value. Yeah. And there's a good, risk to the bank that if that loan goes bad, by the time they get around to repossessing the property and interest is accrued on the debt,
hopefully
they may actually lose money, and the insurance protects the bank against any loss. It doesn't protect the borrower. And that insurance premium is a percentage of the loan amount based on the risk. So at 95%, I put the 5% deposit, it's like 3.5% of the loan amount. At 82%, where mortgage insurance just kicks in, it's only 0.3% of the loan amount, which is $300 for every 100,000. But having said all of that, right now there's government assistance programs, especially targeted to first home buyers, where the federal government will provide a first home loan deposit guarantee. Yeah. So they provide a guarantee to the bank for the extra deposit. Okay. So people who've got as little as a 2% deposit for single applicants with a family. So if somebody's single with a child, they only need a 2% deposit with government guarantee, but for everybody else it's 5%. Yeah. And then that avoids the bank having to take out the lender's mortgage insurance. So, and there's other, incentives for first home buyers as well. But that scheme's only available for first home buyers. So at the end of the day, if somebody's not a first home buyer, yeah, they can still buy with as little as 5% deposit. Then they do need to have enough money on top of that 5% to cover their purchase costs of stamp duty, legal fees, the charges of transferring the title, registering a mortgage. And those fees with the mortgage insurance add up to about another, 4%. So I always tell people, look, the goal would be to have about 10% of the purchase price, if as a minimum, so that you've got enough to cover
got a little bit of a buffer
those other costs. And you won't be using right down to your very last cent.
Makes sense. The two different loans that people often talk about, like variable or fixed. What is how do we explain that to people, or what is best? Like when you're sitting down with someone, how do you pick a variable loan or a fixed loan?
Well, this comes back to the client's unique position. Variable rate loans is just exactly what it sounds. The interest rate on that loan is variable during the term of the loan, and the banks adjust the rate up or down. So there is no floor, there is no ceiling. It can go up as high as it needs to. It can go down as low as it needs to. During the COVID, pandemic, whilst the government was propping up the economy with injections of funds and low rate loans to lenders, we saw rates down as low as 2%, 1.99. Now the interest rate average is probably mid fives to 6% in that sort of range. Interest rates were just held on hold this week by the Reserve Bank. So what that means is the variable rate isn't changing. That wholesale rate that they talk about, the official Reserve Bank rate, is not necessarily the rate. Banks still can change a variable rate loan at their whim. So under a variable rate contract, whether the RBA changes rates or not, banks can move rates up and down. A fixed rate loan, on the other hand, is fixed for a set time. So banks offer loans 1, 2, 3, 4, 5 year fixed generally. Some lenders don't offer all, but most do. And some lenders will even offer a 10-year fixed rate loan. That rate is then determined by the bank based on what they think the interest rate is going to happen over that term. So you can sometimes pay a little bit of a premium for a fixed rate for 5 years because the bank's sort of hedging their bets on where they think interest rates are going to go.
But as a borrower, you go, okay, well, this is what I'm going to be paying for the next 5 years.
Exactly. And that's the thing, is that for the customer, the decision to fix the rate, in my opinion, has much more to do with whether
the appetite for risk, or
your appetite for risk is, if you're borrowing to your absolute maximum, you may feel more comfortable having a fixed rate, knowing that in the next 5 years your repayment's not going to change. The reason to fix the rate has more to do around that certainty than trying to beat the banks at a rate's going to go up or down, because pounds to peanuts, as soon as you fix the rate, if you're watching the interest rate like a hawk,
it'll go down.
It'll go down, and you'll be saying, "Oh, I fixed my rate at 5.5, and now everybody else is only paying 5.2." Remember why you fixed the rate. You fixed the rate because over the next 5 years rates might go back up, and you'll be ahead. So it's more to do with a certainty of repayment and protecting you from risk. And I guess the main reason when we ask people about their feeling towards interest rate movements in our fact find document, we're trying to gauge what their appetite for that risk is.
Because I remember a couple of years back they were talking about that as like a mortgage cliff. They thought, because there were so many people that had all these fixed loans, and suddenly there's a big percentage of them that were all going to come out of that fixed loan period.
Exactly. And that was a result of the pandemic, because when the banks were offering those, 2, 3, 4 year fixed rates at 2%, after that loan comes off that fixed, it reverts to the bank's variable rate. 7%. So, bearing in mind interest rates we saw rise continually over a number of years. Then when the people come off those very cheap fixed rates, they were going to an interest rate in the high sixes. And that was what everybody termed the mortgage cliff, was that all these people, all of a sudden, their repayment was going to, in some cases, treble from what they were paying under that cheap fixed rate to what the variable rate was when they came off fixed.
Did you find A broker can help in property negotiations.
Sometimes, yeah, simply because having the knowledge of what the customer's borrowing capacity is, we have that insight to, where they can go and what their, what their circumstances are.
Yeah.
I think the best person to help a borrower, a purchaser with the negotiations is more probably their real estate agent.
Yeah. I think as long as they've had the initial chat with someone and they know what they can do and mechanically what it would look like if they can purchase something. Where I've seen like brokers, like your job, you go, okay, well, this is what you can do. Like you go and spend it. Whereas I've seen some other banks like try and say, okay, well, we'll give you this much money, or that house you're buying, we think it's only worth $550 or something like that, and then but they won't spend the $560 on it or things like that. They won't spend the extra because the bank has said we don't think it's worth that.
And that, as a broker, we're sort of caught in the middle there, dependent upon the valuation. Sometimes when the bank gets a valuation on the property, that's what it is. The other thing, the unknown sometimes is the building and pest report. If that comes in adverse, the customer can be in two minds about a reduction on the price or whether they want to go ahead and that sort of thing. Having been in the game long term, I think our main role there is helping people understand the longevity of that decision. Like sometimes, people can be looking at the price, and if it's within their affordability, even though they may think they're paying, $10,000 or $20,000 more than they wanted to pay, we can help point out the benefit of
it gets them into the property where they
want to be,
and if you want to be in
take the emotion out of it a little bit. I think.
If you want to be in that property for next 10, 15, 20 years, there's nothing like driving into your own driveway where you're comfortable, and because who knows how long that will be before that time comes up. It might be another 6 months or 12 months down the track before you find a property exactly like that suits what you're after.
And I think the other thing with helping people with property negotiation is just making sure that they are, pre-approved with the bank, so they know that finance is conditionally approved. A pre-approval is still subject to further assessment by the lender once a property is chosen. So we've still got to get a valuation on the property, and the bank's still going to recheck that. One of the things to be careful of, and sort of the red flags for people who are, thinking about, a purchase, whether they're first home buyers or not, is that some lenders, when they issue a pre-approval, isn't really a pre-approval. It's just a computer's assessment of their capacity. So there's a thing in the industry of what we call fully assessed pre-approvals, where the bank actually assesses that application. It's not just submit the application and the computer says, yes, this is conditionally approved. Because 99 times out of 100, when we submit an application electronically, we'll get an instant conditional approval because the input
and then that borrower
meets
thinks
policy.
They have a
That's right.
think they have pre-approval.
The borrower thinks that that's an approval, but really that's just the computer saying, providing everything is correct and all the documentation matches up, it looks like this is going to get approved. So it sends us back a conditional approval. On the other hand, it might send us back an immediate decline if it doesn't meet the bank's, algorithms. But so a broker is really valuable in that the bank won't necessarily tell you that this pre-approval isn't really worth the paper it's written on, but we can know which banks will do a fully assessed pre-approval and which banks will only do a cursory, computerised pre-approval.
Yeah, that makes a lot of sense, because when I'm sitting down there with a buyer and they are making contract, you can definitely tell the level of confidence with the buyer if they have had a chat with someone. They're sitting there, they're like, you got a couple, they're both on the same page, they know what they can spend. There's no arguing. There's no, can we do this? Can we do that? Can you give us 5 minutes? We can go out the front and have a chat. You could still do that. But when you're coming back in and you're sitting down and writing a figure on a contract, having that confidence there to go, we can spend this. There's no arguments in the car, like driving home after that saying, well, maybe we should do another 5 or a 10.
Exactly.
They know exactly what they can do. For that particular property. And in a market that we're in at the moment, because it is so competitive, you don't want to miss out on a property by buy a 5 or a 10 or a 20. You want to know that you're doing everything you possibly can to get into that property because that's where you want to be long term.
Exactly. Yes.
Yep.
Yeah.
Is there so what's one thing most borrowers think that they know but they actually don't?
It's an interesting question. I think probably their affordability.
Yep.
A lot of people make the mistake of thinking, I'm paying $500 a week rent, for instance, so I can afford a home loan of $500 a week.
Yep.
They jump on the internet, they punch in $500 a week into a bank's affordability calculator, and it says
they think
you can
they're
borrow
going to be 500,000 or something.
Yeah, that's right.
Yep.
So I think having a ambitious assessment of their affordability. They don't necessarily think about all of the other costs that come with owning a property. I think that would probably be the biggest mistake.
So what's one in the hidden costs? What's one hidden cost that people don't take into consideration?
Well, obviously the things that people would expect to pay on a property is rates and insurances.
Yep. Stamp duty.
The extra costs of buying a property go beyond the deposit, which is the things that they forget about. They might say we've got $20,000 or $30,000 deposit to contribute,
Yep.
but by the time you take into account the stamp duty on the property, the title transfer fee, which now that properties in Townsville are have moved up in value so much.
Yeah.
The title transfer fee of $232 for a property up to, $170,000, that was all well and good 50 years ago.
Yeah, when they were 170,000.
But now, when you're looking at a property that's $600,000, $700,000, $800,000, and it's $35 or whatever it is, $40 for every $10,000 over 120, a title transfer fee alone is, $1,200, $1,300, $1,400. And then you've got mortgage registration, you've got stamp duty, you've got legal fees. So being prepared for those other costs on top of your deposit that is actually going to go towards the property purchase.
Yeah, right.
Is a big thing.
Yeah, that's interesting. So what's during the loan process when someone's put that formal application in, what's the worst thing a borrower could do during the loan process?
Probably go and borrow extra money.
Yes.
It's funny because, or funny is probably not the right word.
After they've been approved?
After they've been approved.
Yes.
All excited about getting a new home, new investment property or whatever.
Then they go down to Harvey Norman.
Then they go get into Harvey Norman and, this lovely lounge would look really good in our new home.
Yeah.
The banks sometimes, and not all lenders, but sometimes will do what's called a pre-settlement check. And that means that after the loan's approved and documented, the bank still reserves the right to withdraw the finance.
Right up until settlement.
Right up until settlement.
Yeah, right.
So an unconditional approval, you would think, is unconditional.
Yeah, I've always been told, you're 99% there. It's very rarely that, unless someone passed away or something, that it wouldn't go through once you are unconditional, but
Yeah, there's always that chance. And if the bank does a credit check immediately before settlement, in the days before settlement, and other debt is seen, then they will review that approval. Don't go and borrow any extra money, and likewise, don't change your job.
Okay.
Because some lenders will do a pre-settlement employment check. So they don't do an employment check necessarily at the start during the application, but once the loan's documented just prior to settlement, they'll ring and do the employment check. I've had one case probably 10 or 15 years ago now, actually, where I got a very frightening phone call from a lender to say that they'd just phoned to verify a customer's employment, and this was only 2 or 3 days before settlement, and they were told that the customer doesn't work there anymore. Now, thankfully, they had taken
a similar role?
With another employer, and they were actually on more money, and thankfully it was a similar role because they were moving from,
similar
doing
role,
the same job.
role.
Similar role, it was fine.
Promotion.
Had they taken a job in a different industry, that could have been a nightmare for everybody.
Yeah,
So,
wow.
yeah.
Because they would still have to complete that loan as part of their contract terms, but then
They're still contracted to the seller.
Yeah, to the seller.
Yeah, so that's
can't
then becomes a job for their lawyer to try and sort out.
Yeah, that'd be a lot to untangle.
Yeah. So just be wary of that. That once you've got the loan and the house is settled, sure, there's different assessment criteria, and whilst a loan for a piece of furniture or a new car or whatever might have affected your ability to get a home loan.
Yes.
After the loan's settled and you've got the house, you may be able to go and get a car loan and come back and see us.
Yeah, once you got the loan, it's settled.
Once you got the loan and it's settled, you can do what you want to do.
Before that,
as long as you keep making the payments.
Yeah. But before that, just hold tight.
Yeah.
Okay. What about on the seller side of things? So when a seller goes to list their property for sale, should they go and talk to their broker before that?
Absolutely. Go and have a chat to the broker. You don't necessarily have to make an appointment, but certainly give them a call. Because if there's a mortgage on the property, you need to take steps to have that released, submitting a form to the bank to discharge the mortgage. And especially if you've been dealing with that broker in the past, they'll have a good understanding of of how that loan's structured and what properties are securing that. There's a thing in, sometimes people use the equity in one property to support the purchase for the next. So they may or may not realise that they're selling property A, and that property is also security for another property. That debt needs to also be taken into account in how the numbers are settled at, are dealt around at settlement. So it's definitely, if you're thinking of selling a property, have a chat to your broker and get, a handle on exactly how the money's going to work on settlement day. And
yeah, that's fantastic. Yeah, what to do with the money after you sell? Because people don't think about that. I don't think they think about that. Well, they do, but not that in depth. So just finish up then. We're nearly there. A couple of rapid fire questions, just off the top, whatever comes to your mind. Okay, it's just so if you had unlimited funds, which part of Townsville would you buy in? If you could buy anywhere in town, where would you go?
Oh, probably Castle Hill.
Yep, it's nice up there.
Nice up there. Yeah.
Nice view.
Nice view over Mackay Island would be good.
Yeah, that'd be lovely. Can't argue with that. So bush or beach? Would you go for the bush or beach? So that sounds like beach or on the hill anyway.
Yeah. Bush. If I had to choose between bush or beach, it'd be the beach.
It'd be the beach.
Yeah.
Okay, dream feature in a property. If you could have anything in a house, what would you want?
A nice big billiard room.
Big billiard room.
Yeah. I've got a pool room at home, but I'd love a room big enough to have a full-size billiard table.
And room for a motorbike?
Oh, yeah. A shed for the bikes is a mandatory. That just comes as part of the package.
Yeah, so that'd be, would you go fixer-upper or a new build?
Probably a new build.
And that means, so like nice new modern home, or would you go for a Queenslander look? Modern, new build. In 3 words, how would you describe the Townsville market?
Very exciting. That's only 2 words.
No, but it is at the moment. It's hard to beat.
It is at the moment.
It is very exciting.
I mean, Townsville's a great city. I came here in 1983, as I said before, married a Townsville girl, had our children here. They went through private school. We've been settled here for a long time. But I really wouldn't want to live anywhere else, except for the 6 or 8 weeks where it's stinking hot. But we live in air conditioning, so it doesn't matter.
Yeah, I agree. I think Townsville's the best. It's not so much a secret anymore. We got a lot more people coming here, but I think it's the best little city in Australia.
Well, we went through many years where certainly the property values didn't really change for a long time, but there's been a lot of good things with what's happened in the city. The Cowboys come into town. We had the Crocs back in the day, and we've got the Townsville Fire.
I love going to the Crocs. Yeah,
just all the new developments that are going on, the new subdivisions that are just beautiful. And we live in a beautiful part of the world.
Yeah, we got some cranes in the air now too.
Oh, absolutely. What's going on in the city?
Yep.
Yeah.
So, final question: If you weren't a mortgage broker, what would you be doing?
I'm probably a bit old now, but I would be racing motorcycles.
Yeah, wow. Yeah, so you're a big fan of McDoing and...
Yeah. I'd love that idea. if I wasn't a mortgage broker now, I'd
Like
probably
to
be
race some
retired. Though I'm
bikes,
62, so I'm probably beyond racing motorcycles. But
Oh, mate, thank you. But yeah, really thank you for coming in today. It's been a fantastic chat. There's a lot of insight there that I didn't even know about, especially that pre-settlement check.
yeah.
Yeah, I thought that was really good. So anyone, thinking of borrowing or even thinking about the idea of buying something, whether it's a property, a car, anything like that, they should always go and talk to a broker and go and talk to Brett, go and talk to, yourself and the team at Astute. And if they did want to reach out to you, the best way to reach out to you would be just on the socials or like...
We're on socials, Astute Townsville West. There are 3 Astute offices in town. They're all independently owned and operated.
Yep.
Our office is located in Cranbrook, so we're Astute Townsville West. And you can find us on Facebook with Astute Townsville West, or hit us up on 47239331. That's the office number.
Oh, mate, thank you. Thanks very much, mate. Really appreciate it.
My pleasure. I hope it all went well.